Hope everyone is doing well. Rather interesting movement has started to happen in the market, and it is one that I was looking for. The last part of this bear market to establish a temporary bottom is to have a correction in the rally in energy. That appears to have begun. And with that, I would predict that the price of a barrel of oil is going to fall to about $65 over the next couple of months to the next year. This, of course, is going to bring the price of energy stocks down, establish a bottom in the market, which could hold for this month or longer. You are dealing with severely oversold conditions at the moment, even though it may not seem so. People looking at their portfolios, especially those with a heavy technology presence, see them, realistically have dropped 50% or more in some cases, and they feel hopeless. But you have to look at this in comparative terms. In 2008, we didn't crater until March of 2011, at which point actual bottom formed. Many analysts at the time were calling that a temporary bottom and then it would fall through. However, that didn't happen, and you had the next 6 years of the market going up pretty much every year, with a slight pause in 2015 going into 16, and that only lasted a couple of months, and then the market resumed another bull trajectory until COVID hit. Fiscal policy obviously ended the COVID-19 crash, which would have been very severe. And we had another bull market, which was funded by increased liquidity and central bank intervention, which now is over. And you have many analysts calling for a new age now, where there will be more market volatility, more market corrections going year to year, and in general, just a very highly volatile and unpredictable market, even once a bull formation takes place. I tend not to believe this to the extent that it's being stated, and there are reasons for this. All the other volatile markets were caused by an increase, and again, I'm talking about recent history, not the Great Depression. These markets were caused by a rapid increase in energy prices, such as what was seen in the 70s, and the inability to bring those prices back down. And the way that it corrected was, one, with the invention of the PC, which raised productivity, and secondly, inflation eventually outstripped the price of energy, and a new norm was formed. The price of oil actually effectively didn't start going back up until 1999. So you had a period from the late 80s all the way to the end of the 90s where oil actually became less expensive than it had been, as the price had not drastically increased. A couple cents here and there, but nothing major. You may be looking at a similar situation now, as the price of energy is actually going to decline regardless of whether the war in Ukraine ends or whether it becomes a stalemate or a war of attrition, which is likely to happen. At this moment, you may be looking at your portfolio and thinking that it's not going to recover, but history shows that it will. And the graph over here indicates this quite clearly. Bear markets are much shorter than bull markets. That's just the nature of the beast. They can last even up to a year. And you could have a period of repeated bear markets like the 70s. However, there was still money to be made in those periods, even though the markets themselves never fully recovered, meaning they didn't really go up, but they would slide down. And you would have years in between of actually what seemed like bull markets in the middle of a general bear market trajectory. So I would say technology would be the first to rebound off of these lows. And that would be followed by unique companies with unique products. You may see spin-offs actually this time around rather than consolidations, as the EV market is being rebranded by existing legacy auto manufacturers like Ford, which would probably spin off their EV unit into a new company, getting away from the dealer franchise model more to a direct model. So there are going to be opportunities coming up here. This bear market likely will be over in 2023, as the Fed and the central banks around the world will actually lose gusto in raising interest rates, even if they fail to contain inflation, which is something that analysts, or most analysts, are not talking about yet, but it is a probability that is there. They're not going to continue to raise interest rates indefinitely. They don't want a repeat of the 1970s and early 80s, and we should be very aware of that. So that's it for now. See you next time.